government is looking to soften the angel tax blow. As part of a two-step relaxation, the government is looking to exclude several classes of foreign investors from the tax levy. Surbi standing by with the details. Surbi, take us through what's being planned.
Well, there is some good news for startups because the government has moved to soften the blow of the angel tax. Remember, in Budget 2023, the purview of angel tax was expanded to include even non-resident investors, and this had caused a fair amount of hue and cry. Well, not everything has been laid to rest, but there is partial relief that came in today, and that's in the form of a list of entities that have been notified that will be exempt from the angel tax provision. So what are these entities and what are these exemptions? Well, the government is saying that international government-related institutions and entities, they will be exempt from the angel tax purview. So this includes central banks, sovereign wealth funds, a lot of the multinational, multilateral organizations, and any government-controlled entity where the government ownership is in excess of 75%. So that's the first category. Banks and entities that are involved in insurance, they've also been exempt. Category 1 FPIs, which are registered with SEBI, they are also now exempt from the purview of angel tax. If they are making any investments in startups, there is going to be no angel tax levy. The government has also come up with a list of 21 countries. This is the annexure that the government has released today. And then there is three categories of investors: endowment funds, pension funds, and broad-based pooled investment vehicles. What is broad-based pooled investment vehicle? Basically, a fund which has 50 or more investors. Now, these three categories, if there are entities which are coming in from the list of 21 countries, the 21 countries which are exempt, then these three categories of investors will also be exempt from angel tax provisions. I'll just give you examples of the countries that are part of this list: USA, UK, Korea, Japan, Spain, Italy, Russia, Australia, Canada, France. So quite a few countries are part of this list, but by the way, Singapore isn't. So that's an interesting one. This offers partial relief because at least now, if a foreign investor is coming from any of these categories and these countries, then that foreign investor will be exempt from angel tax. However, the bigger issue is the valuation rule itself. What does angel tax really say? It says that any startup that is receiving any equity infusion above the fair market value will have to pay tax on that part which is above the fair market value. And the entire contention is, how do you define fair market value? So the government, in the next step, as it looks to further ease out the blow, in the next step, the government is expected to come out with these new valuation rules, and that will perhaps offer even more comprehensive relief to the startup sector.
Surbi, thanks very much. Much awaited. Tamil Nadu Chief Minister